Welcome back, folks. In this video, I want to walk through two of the trades that I did yesterday, and I want to provide you with a high probability setup, one that I look for all the time, and how you can identify that for yourself. Okay, so let's first talk about the long trade that I did yesterday in the morning, right at the start of the day. So that's the trade there. Okay, quite a simple and straightforward trade. You can see that all I'm doing is looking at these order blocks. Okay, and then I've taken a long, and I've targeted that long trade to the 4 hourly fair value gap. Okay, so if I go back to that on the chart, we can see we've had the dump down on Wednesday. Okay, and then at the end of the day, or just before the market closes, we've had a move back up. Okay, you can clearly see, so this is all within the Wednesday. We've had a reversal. Okay, so we've gone back up, and now you can see the down candles are supporting price. So when the down candles, so look at this price action here, when the down candles start to support price, then that's a good indication of a reversal. Not a complete reversal, maybe a pullback's a better word. Okay, but here you can see the market has turned around, okay, and it started to move higher, and that's confirmed by these down candles, which are your order blocks. Okay, you have a displacement. So when I see up candles, displacement like that with gaps, okay, you see down candles preceding that displacement, okay, then high probability that that is a order block that's going to hold. Okay, that's a bullish order block. So these down candles are your bullish order blocks. Whenever I see 3 candles like that, okay, then on any time frame, then I look at that and look at how price reacts from there. We've seen a nice displacement, and then what happens when price pulls back down into that zone. So these 2 down candles coming into that zone, okay, confirms that price is holding at that level. Okay, so you can see that this is in the afternoon session on that day. Okay, this is after New York has traded down. This is on the Wednesday, and then we start to move back up. Okay, so when I come to the charts in the morning in Sydney, okay, for me the Asia session is a good time to trade because it's the morning in Sydney when Asia starts, which is around, well, it starts officially at 8 p.m, but I don't trade Asia until around 9:30 p.m. But on this particular day, I came to the chart and I could see that order flow is bullish, and so here's the 9:30 candle, right? That finishes at 9:45. 9:30 comes down into these order blocks. Okay, I think I may have taken an entry earlier, maybe on this order block, because it's quite easy to identify the bullish order flow. So the point being that when I've come to the charts in the session that I like to trade, which is Asia, but I will trade pretty much all the sessions, I can see at my time we are coming to an order block and I've taken that long. Okay, the target was quite easy to identify. Okay, because after a large range down day, I am expecting some level of pullback. Okay, so this is the Wednesday dump that we had from the high of the week. Okay, which I've already spoken about in previous videos, and this is the pullback that we are getting that I've taken a long right from earlier in the day. Okay, and I am targeting this fair value gap. Okay. Right there, that was the exit on that trade, and that's what I journaled right here. Okay, so there's the exit. Okay, and that's a very sensible approach to that long, because I know that even if we are bearish, we are going to have some level of pullback, and the level of where that pullback may come into is at a logical price point on the chart, in which you can see there is a fair value gap on a higher time frame. Okay, 4 hourly time frame is a key time frame. Obviously, I didn't get the exact high. Okay, on the day yesterday, last night. New York pushed this higher, but you can see how the body candles have remained within that 4 hourly fair value gap. Okay, so that's why right there was my exit. Okay, as soon as we tapped into the 4 hourly fair value gap, and that is a logical level. Okay, because you don't know if at that level we start to get a move down. Okay, so the trade was well executed, because even if we are bearish, right, we're going to have a pullback into some kind of higher time frame PD array, okay? Or if we're bullish, we'll also then obviously go through there. So it was very low risk from that perspective. And then the overall setup in terms of the order flow on that day, okay, from here as we start to crawl back up, is easily identifiable, as I've marked out on the post, where I've marked out all the bullish order blocks, okay? Even waiting for London itself would have been a nice, easy entry, okay, because I've always mentioned that London, that 1 a.m. to 5 a.m. London session, there's typically manipulation in that first hour, okay, and so therefore that move down is within that 1 a.m. time frame. Okay, coming back down is the manipulation, and then the 2 a.m. or 2:30 a.m. that period where I like to take entries for the London session, we got a nice big pump up. Even that just there was a nice easy long, but I was already long, okay, from the day, and I'm also going to add at London, because on this particular day I'm not overly bullish. Okay, I'm looking for price movement lower, as explained in my analysis video. Okay, and so that long from earlier in Asia was just a scalp trade up. Okay, so now let's talk about the short, which was the expected move down. Okay, that's that trade there, and it was a short, again, just based on my high time frame analysis, which I've already discussed in my analysis video. So if you haven't seen the analysis video posted yesterday, you need to go back and watch that, because that teaches you and talks about why I was directionally biased to the downside. Okay, now let's talk a little about the fact that how can you understand where price might reach into, because obviously if you are looking at this fair value gap on this 4-hourly chart, you might expect that price is going to retrace up into that zone, okay, with that pullback, and then go back down, which is a safe assumption. But if you had just entered at that level and shorted at that level, right, just as soon as price went into the 4-hourly fair value gap, well, then you would have been in big drawdown, okay? And most retail traders can't handle that level of drawdown, right? Accounts below, and that is, what's that, nearly 100 pips, okay? So what can you do in order to identify the best level, okay? And it's all about waiting for price to show its hand, okay? You can't just immediately short just because you've got into a fair value gap, okay? It's not going to work, right? And you can see how prices continue to go higher. So let's drop down to a 50-minute chart. What do we know, okay? When price is moving up like this and we're expecting a move down, we're looking for key price signatures, okay, on a lower time frame. We know that there's news at 8:30, okay? Yesterday there's news at 8:30, okay? So that's the news from yesterday using Forex Factory Calendar, okay? Sorry, it's down here, yep, on Thursday, okay? And this is the 8:30 news. So 8:30 was a key time to wait for any anticipation of a volatility injection, okay, from that news announcement. So that's the key time. So I'm going to drop down to a 1-minute chart now and show you what you could have identified and what you should have waited for. Okay, so let's go for, where is that? Here we go. Okay, so this is all the news announcements, and these are repeating patterns, right? These are repeating patterns that you got to learn by studying the charts. And I want to also talk to you about another setup that occurs all the time that allows you to also forecast future price action. Okay, but let's first talk about this entry on a 1-minute chart. Okay, so again, we have the 3 candles. Okay, these 3 up candles are your bearish order blocks. Okay, so this is all before the news announcement at 8:30. Okay, overall, what we can see on this day, it's actually just a pump, right? They're pumping up the entire day for this massive dump. So at the news announcement, okay, you get the initial move down in this 1-minute candle. Okay, here retail traders are going to be thinking the 4-hour gap, which is what this blue box is holding support. So there's going to be a lot of people buying at this level. Okay, but this is where the higher time frame directional bias is so important, because someone who understands and has a directional bias to the downside will know that there, even though it's a dump, we're not expecting that level to hold. We're expecting price to reprice lower. Okay, so you're waiting for a move back up into these up candles, which is the order block, or this swing low. Notice that you do have a breaking structure because this candle closes below this swing low. That swing low is important because that's the swing that created the highs, okay, that now we've closed back below. Okay, now you might be asking, why not this swing low? Well, that is within there. So if this wasn't there, then sure, that would be important, but all of that price action is within this swing here. Okay, so the market, you can see price comes back up into this bearish order block. Okay, all these down candles, they're just within there, so that's all one kind of move. Okay, and also this bearish breaker, last few down candles before this swing low. As we've moved up, once you go through that level, then you have your swing low, and basically it's coming into the bearish breaker. Okay, you can see perfect price delivery 1 minute after the news announcement. Okay, that is where is a reasonable entry. Okay, you'll stop a few pips above this level, quite a reasonable stop from that entry. Okay, but you need to allow for price to retrace back up here. It may wick up into there, so that's why I like to have a little bit of buffer. Okay, because on news days you're going to expect high volatility. Okay, so you need to allow some flexibility in price, but ultimately it really shouldn't go back up there. You don't want to see price trading back up there. Okay, so that's the entry. Okay, and on your targets, well, you just got to find a reasonable target wherever you see some equal lows. So this would be a level that you could target. Okay, as it's been pumping up, this is just below the 4-hourly fair value gap. Okay, this blue box here, I've shaded in the 4-hourly fair value gap. Okay, so I mean entry from there, anywhere as it's coming back up into the bearish breaker, okay, is going to be a nice 70 pips just from that move to that move, right? You don't have to get the ultimate low. Okay, go for the easy targets. Okay, if we just expand this and just put our candle, a little box around the bearish breaker. Okay, theoretically it's all these 3 down candles. Okay, but they're pretty tiny. Let's just grab them all. Okay, you can see there's just tapping into that midpoint, right? We're not getting any closure above that midpoint. Okay, and that's what I like to see. Okay, so that's an easy entry on that 1-minute chart after the news has printed. Okay, you get an immediate displacement, closing back below a swing low. You've got your bearish breaker, your down candles here, right? You've got your swing low that's now where we have confirmed a breaking structure, and your 3 up candles, which are your bearish order blocks. And we also just tap in to that as well. You might be asking, why is that not these 2 down candles? Why is that not the bearish breaker? Well, because they are just inside of this price move, right? So these 3 candles are just within there anyway, okay? So that's the entry. Now, as I said, you can target wherever you can see some equal lows, right? Wherever you find there's liquidity, this will be a very good level of target because it's consolidation where price has moved above, but we haven't come back down to that level. So below there are some very nice equal lows that I would also find. Let me just fix that right there, okay? That would also be a nice target, right? But the point I'm making, so if we just target from that swing low where you might have entered down to those equal lows, that's over 100 pips, okay? Point I'm making is that you don't need to get the best exit. I don't target the best exit, okay? It's the easy exit that I target for, okay? So on a 15-minute chart, let's now look at this. You can see that we went straight through previous daily lows. This entire day was a big pump, okay? You can see price action. It's just pumping up, pumping up, pumping up. You got to ask yourself the question, why is this pumping up? There's no news announcement. This is a pump up before the news for the dump straight below the lows of the previous day, okay? So that was a setup on that short, which I've journaled here, okay? And as it's going down, I've started to peel off my position, right? So I've managed my risk by not trading full size, okay? Normally I trade a 10 lot or a 15 lot, multiples of 3. So usually it's 3 lots of 5, 3 positions of 5 lots. But in this case, I've just started off with a 3 lot and then positioned other entries and then peel them off as the market was moving down at key levels, right? At key lows that I had identified, okay? Not waiting for the ultimate target. I don't need to wait for the ultimate target, and I typically don't, okay? So let me now talk about a very high probability setup that reoccurs all the time that you need to go back and backtest and study the charts to identify, okay? And it's very easy to identify because the market shows its hand, okay? So this move down on Wednesday. Let's talk about this move down. Let me get rid of all these lines. Okay, I'll keep the lines. Let me just take off the box. Okay, so this move down on Wednesday was our first down day. Okay, I have spoken about this in previous videos. You can go on my channel, search for first down day. There's more videos, there's examples on this setup. But basically, when you have your first down day, so let's just think about what's happened here on the markets. Okay, we've had a pretty decent pump up, right? This is all of Monday pumping up. Okay, and we've been pumping up since last Thursday, Friday, Monday. We've had this pump up. Okay, and then we consolidate on Tuesday. Okay, Tuesday is a narrow range day. We can see that on the daily charts. Okay, if I show you the daily charts. I've spoken about this also, okay? So you can see Thursday, Friday, and Monday pump up. There's Tuesday, narrow range day. There's our Wednesday, okay? So Wednesday, the first down day we've had, okay? And we've had that after taking out the high of the week. So that is the high of the week at that point in time, okay? That's the first down day we've had after taking out the high of the week. So if we had a first down day, we can expect some kind of repricing lower the following day. That's what I want to talk about, okay? So here we've had a close that has been down day, right? Meaning that on this day, the market closed below to open. Okay, so just go back and look at your charts and you'll see that on Wednesday, the market opened higher and closed lower. Okay, that's the first down day that we've had after taking out the high of the week. Okay, high of the week was on that Wednesday, so up this level here. Okay, after taking out that high of the week, the market's closed lower. Okay, that sets up a bearish bias. Also, I'll discuss in my analysis video on that 4-hourly chart. Okay, so the next day, okay, after you have a first down day, right, the next day you're expecting the market to be a bearish repricing lower. But what your objective then is to find where, okay, are you going to expect repricing lower from, okay? And so we know that news is coming out at 8:30, okay? And then it's all about looking at the chart. So you're waiting, you're looking, you're seeing this crawl, okay? And you know news is coming out. So because we had a first down day on Wednesday, you can expect Thursday to have a day where you get repricing lower. Then it's all about your entry. I've already gone through the entry on this 1-minute chart for this particular day, but that's where you can expect this move down because the previous day, Wednesday, was the first down day, okay, after taking out the high of the week. So this is very common, and if you just go back and backtest, you'll find this in any market where when the market takes out the high of the week, okay, so if you've been going up, the market's been going up for at least 3 days, you've got a lot of volume trapped there, then you have a first down day after taking out the high of the week. You can expect the next day, for example, Wednesday took out the high of the week and closed first down day. We can expect Thursday will have an opportunity where the market will reprice lower from a high. So you're looking for that sell high, okay? And you look for that, for example, by looking at the chart. So you're looking at a 4-hourly chart and you're seeing that this is the down day we've had. Where could this market pull back up into for the opportunity for the sell high? Because the market's had this first down day after taking out high of the week. That's the setup, okay? A setup means you have these specific things that happen on the chart, okay? The market forms a certain pattern. Now this setup is repeating, okay? Where you will have 3 days of volume going in one direction, Thursday, Friday, Monday. It can be any 3 days, Monday, Tuesday, Wednesday, okay? Or as we had last week, Thursday, Friday, Monday, okay? You want to see some kind of short, small range day like we did on this Tuesday, where you're going to have the move down, which we did on Wednesday, and that move needs to close lower than it's open. That's what I classify as a first down day. Have to take out the high of the week, and then the day closes lower, okay? Doesn't have to close lower on the same day takes out the high of the week, but you need to have high of the week taken, and then either that day or the next day, you want to have that first down day, meaning that the close of that day has closed lower than it's open. Then the following day, you're expecting a sell high. Okay, that's sell high for us. So here was our Wednesday was the day that we had a first down day after taking it high of the week. Okay, Tuesday was our small short range day or inside day. Okay, so Wednesday closed lower. Thursday we had the pullback, and this Thursday, the next day after this closed down lower on Wednesday, the first down day. Thursday today we're looking for that sell high opportunity, which we got, and you want to kind of align your entry with the news. Okay, you don't have to enter prior to the news. Just be patient. Okay, as I've shown you on a 1 minute chart after that news announcement, we can see a setup. You need to still see a setup. It's not an automatic entry just because we've had a first down day. You still got to have your setups. Okay, so the setup was, how is the day evolving? We've got this crawl, pump up. Okay, all before the news. There's no reason for that market to be pumping up. Okay, then when you get to the news, you can see your bearish order blocks, your swing lows, your bearish breaker. All this is there in advance for us to see and identify before that news announcement. Okay, this is at 8:26. All this price action, the swing low, the bearish breaker, this 3 up candles, this is all there before the news announcement. The news announcement simply confirms the direction. Okay, we get displacement lower, and then this pullback into our bearish signatures is where we would expect price, repricing lower. Okay, then it's just all about managing the trade, identifying the key levels to take the trade off at these key equal lows or key pivot points. Okay, so go back and test that setup first down day. Okay, if you look at it on a daily chart, okay, it's easy to just summarize some of the rules. Okay, but you've got to go back test this and find these setups. So you got 3 days of volume going up in one particular direction. This was Thursday, Friday, Monday. Here on Tuesday is our short range day. To me, that's just an inside bar, even though we had a bit of trading above the high. Okay, we can expect when we have a short range day, a small range day, or an inside bar, the next day should be a large range day. Okay, this is the day that you want to see a down closed candle, which we have. The next day, which is Thursday, we want to find some kind of sell high opportunity at the right time. We want to see if it's going to be a short setup, a pump up, and you can see that pump up all day. We've just been pumping up. Okay, all day. Right, this is all day just been pumping up, pumping up, pumping up. For what reason? There's no reason for this market to be going up like this. There's no news injection, no volatility injection, no news announcement. Okay, but at the news, we get this dump. That's the pump for the dump, and that's the sell high opportunity after having a first down day, after taking out high of the week. I classify this as the free cash Thursday setup. Okay, why do I call it a free cash Thursday setup? Well, Wednesday is your middle of the week. Okay, and that's when I look for reversals or pullbacks. Okay, so that means if I get a first down day on a Wednesday, which is the most highest probable day to get a first down day, that means Thursday, the next day, I'm expecting this crawl up for the sell high. So Thursday, therefore, is free cash Thursday. Okay, that's how I internalize this setup. Go and back test it, study the charts, learn the setups. Okay, it's repetition that's going to make you understand price action. You've got to study the charts.